Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti. On behalf of OTC Markets, as well as our co-host, Alpha Transform Holdings and Blockchain Wire, we're very pleased you joined us for the Blockchain and Digital Assets Conference. Our first live presentation of the day is from Amphibian Capital. Please note you can submit questions for the presenters in the box to the left of the slides, and you can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found in the conference platform. At this point, I'm very pleased to welcome Alex Pereira. He's the Chief Operating Officer, and Todd Bedell. He's the Managing Partner and Co-founder of Amphibian Capital. Welcome, Alex and Todd.
Hey there.
Yeah,
Thank you,
thank you.
John. Thank you very much. Yes, Alex and Todd here with Amphibian Capital. We are a digital assets hedge fund of funds, and why we do what we do is both Alex and I and other co-founders were long-term holders of Ether and Bitcoin. And none of us have intentions to sell. We want to maintain that long exposure to the underlying tokens and generate some alpha or accumulate more Bitcoin and ETH. So over the last year, our team has visited over 20 countries across 4 continents, and we can really see that there is a major shift and a major opportunity ushering in this new institutional era with digital assets. So, yeah, today we're going to talk a little bit about the changes we're seeing in the institutional markets and what we're doing to take advantage of these inefficiencies. So, our thesis here at Amphibian is quite simple. We're bullish on Bitcoin and ETH for the next 5 to 10 years, and we expect volatility and inefficiency in the markets to continue, which as a quantitative hedge fund of funds, those are the type of market conditions where we can generate the most alpha, accumulate additional Ether and Bitcoin, and achieve attractive returns for our underlying LPs. And our goal is to 3 to 5x the amount of ETH and Bitcoin that we have over the course of a market cycle. So a lot of those that are familiar with the crypto cycles believe we do move in 4-year cycles. We just had the Bitcoin halving a couple days ago, so we'll talk a little bit about that later. Historically, the Bitcoin halving 1 month after the halving, BTC prices are between 5 to 10% higher than they were, where 12 months after it's hundreds of percent. So we feel the market conditions are ripe and great right now to continue to grow at the pace that it's meant to. So right now we're targeting 3 to 5% returns per quarter. That's Ether on Ether and Bitcoin on Bitcoin. So if you look at how our Bitcoin fund has performed, think about owning 100 Bitcoin, and you have permanent exposure to the price, to the beta. And if January 1st, 2024, you had 100 Bitcoin. At the close of Q1, you would now have 105 Bitcoin, plus exposure to the 50+% that Bitcoin has done. So it's a way for our LPs, ourselves as GPs and investors in the fund, to accumulate additional yield on top of our long-term holdings. So the 3 areas that we're going to cover today, we're going to talk briefly about this new institutional era, and we'll touch briefly as well on market dynamics and potential cycles. And last will be on custodies and solutions, and it's creating the framework or the infrastructure that we feel will allow institutions to join the space in a bigger way. As a disclaimer, anything we go through today is not financial advice. Investing in digital assets carries inherent market risk. So all of the normal disclaimers, not financial advice here. So let's talk about how did we get here at Amphibian. So I started Amphibian with James back in 2021, launching our first USD and ETH fund in 2022. And we teamed up with the team at Chainlink Capital, which is now called Hyla Funds. That's Andrew, Paula, and Mark. They launched the second ever digital asset hedge fund of funds. So super niche, super yeah, niche little sleeve or vertical in the crypto space is being a hedge fund of funds. And then in the last year, we brought on Alex Pereira and a number of other senior advisors. So thank you for joining us, Alex. Alex cut his teeth in traditional finance. He spent 20 years at HSBC as the COO of Equities America. So it's kind of a joke. It's like Alex, we say Alex brings in the gray hair, but it's not even much of the gray hair. But what he really brings in is that wisdom and some of those traditional finance risk management principles where we can take Amphibian from, a digital assets or a crypto company to something that's recognized and in every investor's portfolio. Other advisors that have helped us get where we are. We have Fabio with Abraxas. They run a $1.4 billion crypto hedge fund. Brittany Kaiser is one of our GPs. She's the chairman of Griffin Mining, one of the largest Bitcoin miners in the world. So yeah, it's quite exciting what we've been able to build. And then last is the quant team. So when I get into portfolio strategy and the way that we build out and make decisions of which hedge funds to allocate to, these quants analyze a bunch of daily data from all of the underlying funds that we're DDing. So we're blessed to have them on the team. Um, Last thing on Alex as well is before joining Amphibian, he also was the CTO and COO of a market neutral crypto hedge fund called Dunamis, 250 million AUM. They had great returns for their investors, and just due to burnout, they returned investors capital in May of what was that 22, right before 3AC, skipped
Yeah.
Terra Luna, did it missed out on FTX, and a big reason why they returned the investors capital is they didn't feel that the custody solutions were up to par to be able to handle the institutional volumes and institutional flow, and the rewards of investing in these nascent markets were not enough to offset the risks. And just recently, Alex and some of the folks that he founded Dunamis with have decided to come back into the markets because that risk to reward equation has changed with new developments in terms of regulation and, more importantly, infrastructure. So another thing that Amphibian does as a hedge fund of funds is we've created a consortium called Amphibian Unite of all of our underlying funds, all of the top managers in the crypto space. So collectively, all the folks in our group manage over $10 billion on centralized and decentralized exchanges. Amphibian ourselves manage 55 to 60 million currently, depending on the price of ETH and Bitcoin. But what this consortium is extremely valuable for is monitoring market risks. Oftentimes, managers didn't want to talk to one another because they felt their edge or their alpha would be eroded. But after FTX, we're all in this together, and additional flows, additional AUM in the space is better for everyone. So yeah, a lot of our managers now, they share risk management data. They share if they're seeing outflows from an exchange. We share the top service providers. So it's really a way that we've created an army of the top funds and players in the space, which has been exciting for us. So yeah, with the Amphibian vision, there is a bigger mission, and we won't touch on it too much today, but the general partners and co-founders have agreed to donate up to 50% of our GP profits to creating a future Earth that we want our children to live in. So aside from doing well with your investments, our intention is to do well with the profits from the investments as well, with our consistent risk-adjusted yield. So yeah, moving forward, to kick it off, just the institutional era. Where are we right now? A number of us in the crypto space have likely seen quite a few cycles. I bought my first Bitcoins back in 2014, so that's early for some, and also that's quite late for others. So we really like to split it into 4 cycles, and what we've seen is that historically there has been a 4-year cycle. The Bitcoin era from 2011 to 2014, where Bitcoin was up thousands of percent. After ETH, the Ethereum protocol, ICO'd and launched, the ETH era, went from 15 to 2018. And then 2019 to 2022 was really like the early app era. We call it digital assets 1.0. That's when the first that's when DeFi started to get big. That's when we started building a ton of applications on L1s like ETH and additional L2s on top of ETH as well. And where we are now, we feel began last year is this institutional era where all of the largest players in the space are trying to really set their flag in the ground and see how they can get exposure to this nascent space. I see some questions coming in, and yeah, so thank you for the question. One of the most recent ones is how does one invest with Amphibian and any plans to go public? So there are no plans to go public at the moment. Our preference would be to stay as a private company to have more, I guess, control over all of the decisions, not only of the portfolio, but also with the donation of the profits as well. That's really our mission. So no intentions to go public. How do you invest? We have onshore feeders in Delaware if you're a US person. We have offshore feeders in BVI and our masters in BVI. So accredited investors if you're a US, professional investors if you're the UK or outside of the States. And at the end, we'll be sending out our emails if you'd like to set up a one-on-one call. So why are digital assets different in 2024? Institutional adoption. So there's rising institutional interest. JPM coin, JP Morgan, whose CEO Jamie Dimon's been quite outspoken against crypto. Yet they have their own internal stablecoin, JPM coin, which does over $1 billion in daily transaction volume. So HSBC as well, they helped tokenize a Hong Kong $600 billion government bond and issued it in 4 different currencies. So that right there just shows how crypto is truly worldwide. It is, interoperable, meaning it can go into multiple different currencies. So it just really highlights all of the benefits of technology with more of the traditional principles of fiat as well. 2024 events that happened, Bitcoin just halved earlier this week. And as I mentioned, in the 12 months to follow, historically, that's been hundreds of percent for the crypto markets. So that's exciting. And I think a big change too is the accessibility. We're all likely familiar with the Bitcoin ETFs being approved. They've been doing quite well. And why the ETF approval is important, it's 2 reasons. With the Bitcoin halving, rewards are lower, and these ETFs are constantly buying up Bitcoins every day. So almost we feel there may be a supply shortage on the horizon. And also why it's important is because it opens access to a totally different type of investor. An investor that may not have the technical know-how to manage their own keys or do analysis of a quantitative hedge fund strategy themselves. The RIA market is over $120 trillion. And now with these Bitcoin ETFs, pension funds, IRAs, and 401ks can get access to this asset class without extreme technical know-how. So just to one last thing on the ETFs, I'm sure they'll come up quite a bit today, but the Bitcoin ETF data really does illustrate the demand. There's been over 220 billion in total cumulative volume, and as of Tuesday this week, IBIT, which is BlackRock's ETF, is a top 10 ETF of all time in terms of consecutive days of inflows. So, yeah, I just thought that was a pretty wild stat that already the BlackRock Bitcoin ETF is one of the top ETFs of all time. And yeah, just being sensitive of time here, just skipping through, a lot of the folks on here are more sophisticated and I'm sure understand the crypto markets. So we're going to get into talking about the portfolio and how we manage risk and really what are the differentiators for Amphibian. So I mentioned our BTC fund earlier. We have long exposure to Bitcoin while generating alpha BTC on BTC. We also have our ETH denominated fund and USD fund. So the idea is that each individual segregated portfolio is market neutral relative to its underlying currency. So our fund managers that we invest in as a hedge fund of funds have been trading as early as 2016. Most of them have daily P&L live data since 2018, and I'll get into the daily live P&L data in just a moment here. And yes, thank you for the question. the question is, can you speak to how you will flow returns to fund holders? So each month, our investors get, a statement from our fund administrator, which is NAV Consulting. We have a 6-month lock, but if you do want to take distributions after the 6-month lock, you can take withdrawals from your LP position. So as an example, one of our GP advisors is also an LP, and he is on a sabbatical right now, traveling in India, and he put 7 figures into our USD fund, which has returned over 8% in Q1, and then he just took a distribution at the end of Q1 for less than the 8% that we returned on his investment. But yeah, he's able to travel the world while having, having some seven figures of assets with us and getting, 8% in a quarter. So great. They asked if we do yield farms. So each fund has its own underlying positions. We are directly on chain only in our ETH fund. We typically don't do yield farming. We just go directly on chain with one of our MEV and ETH specialists. So how we participate in DeFi, we're accumulating eigenlayer points, EtherFi points, and interacting with these restaking platforms. But we don't really go into yield farms unless the risk to reward is up to our standard. And at this exact moment, we don't have exposure to yield farms. So yeah, thanks for the questions and the engagement. As I mentioned earlier, yeah, and I know there is a question. Someone's asking, hello, ETA, Paul. I'm not sure. I didn't see your original question, Paul. If you wanted to repost it in the chat, it says waiting. So yeah, Paul, please, I'm not only seeing hello, ETA, and waiting if you did want to repost your question. Okay, now back to, Amphibian BTC Alpha. The way that we build our portfolio is a robust diligence and risk management process. So we've looked at over 700 crypto funds. We have said no to 98+% of them. That's because we have institutional grade risk management. The portfolio has over a 5 Sharpe ratio, and we use our proprietary algorithm to make allocations to our underlying funds. So with our consistent risk-adjusted returns, the goal is 12 to 15% target in a non-bull year. And over the course of the 4-year cycle, we'd like to double the amount of Bitcoin or ETH that you have. So you have 1,000 ETH. At the end of the next cycle, we'd like you to have 2,000 ETH plus exposure to the anticipated price movements moving upwards, and then same thing for Bitcoin as well. So yeah, just being sensitive of time here too, I just wanted to hand it over to Alex to quickly talk about how the infrastructure in terms of custody has changed in the crypto space, and how we're shifting more to a traditional finance type of having custody and trading separate. So Alex, if you wanted to take a minute to just talk about custody, I think that'd be helpful for our audience.
Yeah, sure. That is going to be one of the biggest innovations that Amphibian is helping to lead, is the idea of have off-exchange settlement, very similar to what we have on the equity space right now in traditional finance, whereby we transacted the exchange, but the settlement actually happens at the custodian. We are coordinating with the market to drive the funds that we invest to be more and more off exchange. So we actually protect the assets for the investors to a potential FTX number 2 side effect. That will bring to the market a little bit more automation and also bring more safety to the investors as well, because all the custodians that are emerging after FTX, they're all coming with bankruptcy remote. They're all coming with insurance and protection of the underlying assets, and then with our active risk management of the trading positions as well. We believe that combination bring the institutional grade that needs for the crypto space, and that's exactly why Amphibian is well positioned to actually get this curve and then lead the implementation across the peers. That's fundamentally what it started.
Yeah, super. Thanks, Alex. So yeah, one thing he mentioned is collecting the underlying data from the funds that we invest in. So we're constantly, as part of our risk management, we're constantly re-underwriting the funds that we invest in. So we get daily P&L data, we plug it into our algorithm using a Markowitz model to find an optimized allocation where we can keep the volatility low, keep the target annual return high, and yeah, it's been doing well so far. And someone in the chat asked, what do we think of the Athena stablecoin backed by Arthur Hayes? Yeah, we did have exposure, and we pulled, and so we did have exposure, and after doing deeper diligence and actually seeing the live returns versus what we're advertising, we did decide to pull. So the benefit of being a fund of funds is we've looked at hundreds of funds, and we often see, we see back tested data and things that are advertised, and then when we get the live data of actually testing out positions, we see like kind of under the hood and how the things work. So we tested it out with a small, probably less than a 500K allocation, and we no longer have exposure after doing deeper diligence and having exposure for a short amount of time. So thank you for that question, Skip. Yeah, another individual asked, how is our performance versus our peers? So that's one thing that's unique about Amphibian is we are to our knowledge, the first and only ETH and Bitcoin denominated fund of funds. So we don't have peers or competition in specifically the ETH or the Bitcoin space. So yeah, just Q1, BTC is up 5.44 BTC and BTC, ETH's up a little over 7% this quarter. So I'd say like if our peer for ETH specifically is like you can stake ETH on Coinbase and get like 2.6%. You can stake ETH on Lido. That's the most popular liquid staking platform that yields 3.2% over a full year. Just in the month of March, our ETH fund did 4%. So in 1 month, we essentially returned 20% more than the best liquid staking provider. So that's the long way of saying where our performance has been doing really well relative to our peers. So thanks for that question. And I was told not to say names, but yeah, thank you very much for that question. That's super interesting. So last thing here, just to touch a little bit more on our risk management, because that is typically a lot of the diligence questions that we get from crypto treasuries that we help to manage and other institutions. So here's a checklist of how we source and diligence underlying investments. I mentioned it earlier, but we've looked at over 700 funds, and 98% of them don't make our criteria. So yeah, it's something that helps separate us from our peers as well. So one of the main goals is to eliminate and mitigate counterparty risk. How we do that is by custodying assets off exchange using some of the models that Alex referenced earlier. So currently what we're building out right now is our risk dashboard, where we can have real-time visibility for any moment over all of the positions inside of our fund. So a lot of crypto folks want to always know where their assets are, and that's why we're building out the risk dashboard to have real-time visibility into all of that. So yeah, just to kind of wrap things up here, how does one invest in the markets? I mean, with Bitcoin, you could hold your Bitcoin in cold storage. There is Bitcoin DeFi coming out. Our on-chain specialists have advised us to stay away for a little bit until they could do deeper diligence. So yeah, what can you do is essentially hold it in cold storage and do the heavy lifting yourself, creating portfolio goals, identifying risks, finding the funds and DDing them, eliminating counterparty risk and diversifying. Or you can do that, have Amphibian do that for you. Gain alpha, BTC on BTC, gain alpha, Ether on Ether, maintain long exposure to the crypto markets while creating robust, resilient, attractive returns with these institutional type of risk management frameworks. So yeah, as I see more questions coming in here, someone asked where our fund is domiciled, and what I said earlier. Yeah, we have our BVI master fund is in the British Virgin Islands, so we take investors from all throughout the globe, and then we do have Delaware feeder funds as well for U.S. folks. I have another question coming in. It says, Alex, what is your history with HSBC? Alex, do you want to talk a little bit about about your role there and what you did at HSBC and how it may be applicable to crypto?
Yeah, sure. I was the global CEO for execution service and equity space. So focus on trading equities across the group. And my division was more responsible for post-trade controls, risks, and make sure that we are compliant in every jurisdiction that we operate. And that would include algo trading, certification, market access controls, etc. And I was also responsible for prime finance and equity derivatives in the Americas. So all these custody solutions and leverage solutions that we actually seen bubbling up in the crypto space, I used to live there over the past within my 18 years of experience in the bank. What I bring to Amphibian is exactly that: is the institutional overview for the crypto space. So market access practice, controls around risk exposure, concentrations, risks, as well as the custody side of things, and then make sure that we all tied up an institutional grade for the crypto space. That's pretty much it. And I'm
Super.
happy to have a one-on-one as well if it needs to go a little bit more deep in details, just in case.
Yeah, I like Alex and I have, we have an amazing working relationship, but we're also so different because he knows how to get into the weeds at such a level of granularity that, I'm yeah, I just don't have the 20 years of experience working at a large institution like that. So it's really nice to be working
That's
here
why I
with you.
have
And
the gray hairs. That's exactly why I have the gray hairs.
I love it. I love it. So someone asked, do you invest in any other cryptos? So we have the Bitcoin fund where the returns are Bitcoin on Bitcoin. We have the ETH fund where the returns are ETH on ETH. And then we have our USD market neutral fund where the returns are USD on USD. That returned, the USD fund did about 14% last year. So, if you had 2 million bucks and you put it into our USD fund, you would have essentially returned 280,000 and could take distributions of that if you are on sabbatical and traveling. And we are looking. We are looking at launching a Solana denominated share class later this year. First thing on the roadmap is Amphibian Institutional. We have significant interest from some international institutional players. So what we're building out currently is Amphibian Institutional that will have 100% of our assets in these remote custody solutions. We'll have internal managers that are managing the risk across all of the different verticals. It's really, the idea is to be a fund of managers as opposed to a fund of funds where all of the internal strategies are ran in-house. And I saw another question just came in here. Great question. How much AUM? It's between AUM, assets under management, is between 55 million to 60 million. The prices of ETH and BTC have been moving up and down, and then we have some larger 8+ figure checks DDing us now. We're anticipating around 6-1, but it's as of today, I'd say 57 million, and over the last month has been between 55 million and 60 million. Other than the halving, what other catalyst do you see in 2024 for Bitcoin? I think Bitcoin DeFi, to see how that does play out, I think that is a catalyst. And some of our fund managers who do invest in it are calling it DeFi Summer 2.0. The specialists that know the most about stuff on chain, they don't think the risk to reward for us personally, Amphibian, is worth it at this moment. But I do know some friends, they aren't LPs in Amphibian, but they are exploring Bitcoin DeFi. So I think that is certainly a catalyst as well. And then outside of Bitcoin, other catalysts is like ETH just did their Denkun upgrade. It's like EIP 4484, I believe is what it is. And what it does is it allows it to scale. It allows transaction fees to go lower and allows it to scale without having huge transaction fees. So yeah, just in things, just to wrap everything up. Yeah, if you're looking to double or 3 to 5x your Bitcoin or Ether position over the next 5 to 10 years, we would love to have a conversation with you. Both Alex and I are excited to be here. And you can email us at Todd@Amphibian Capital. Note that Alex's full name is Alexandre, and I can't put it in the chat, but yeah, if you'd like to email, so it's actually Alexandre@Amphibian Capital or Todd@Amphibian Capital. And yeah, please book a call with us. We'd be excited to talk more. No other questions in the chat, so I think that's all we got. Thank you very much for the time, OTC Markets, John, Janelle. It's been a pleasure.